All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for Monday evening. Well, I've been out working on some trees. Had some trees come down. We have some dying cottonwood trees, so I was out. But a couple of branches came down. Could have been pretty dangerous. This is what it looks like from another side. And that's me on the back end. So why am I showing this? Why am I showing this? Now I don't want you to think I'm macho, but it's for a good cause. It's to make sure none of those branches come down on some little kids that could be the end to them. And in all honesty, what a way to get your kids out of the house to work on something that earns them some money, and it's a way to earn money that I don't think most kids would ever get the chance to do. So yes, I want you to think I'm extremely macho. Plus, it's just fun. It's so loud when you see it all come down because the trees are so brittle. They're just not getting enough water anymore. They used to be along a canal, and they're gone. So again, where I was trying to go with all this is apologize for not being around last week. In all honesty, we have 40 million people unemployed. And when you have a workforce of about 165, it's really already closer to a 25% unemployment. It's scary. If you go to usdebtclock.org, and I'm doing that because Treasury budget came out today, it's pretty amazing to see the debt that we're in, the federal debt, to see if this goes in line with what's being reported. $25 trillion in national debt, but if you follow down a little bit more, obligations is even worse. We're obligated to like 100 trillion somewhere. It's just, it's absolutely unbelievable. All right, so where I'm going with all this today, some things aren't making sense. We were up yesterday on an employment that was, for lack of a better word, dismal. Temporary layoffs increased to 18 million. We had an unemployment rate that's at 14.7. Go through and read some of the key factors. Non-farm payrolls declined by 20.5 million. Right in line with the Great Recession or the Great Depression, right? Average work week was down just a little bit. Something that I wanted to point out that I found interesting was that hourly, where is it? The hourly Oh, somewhere in here, the hourly rate, that doesn't, what the freak am I looking for? Average hourly earnings were up 4.7% after increasing an upwardly revised of 0.5 from March. Over the last 12 months, average hourly earnings have risen 7.9%. Why is that so important? It tells you that a lot, for a lack of a better term, those that aren't making much, those part-time or undereducated, underemployed, excuse me, the second one, there are a lot of asterisks that can connect to the report. For instance, a huge jump in average hourly earnings is really a reflection of how destructive the job losses have been to lower paid workers. That's what I was trying to find. I'm sorry I'm not finding it. Sorry, I'm a little scatterbrained today. So plain and simple, the losses are much worse than reported. As we had our neighborhood dentist come by. He runs a pretty big office. I would dare say, as I'm trying to count through how many employees he has, probably in that range of somewhere between 10 to 16. And the short answer is, for him, there's some people that have said, you know what, it's better for me not to come back to work till after August, that they're going to make more doing nothing and will stay out of work, in which case he's going to end up paying unemployment for them and paying overtime for his other employees. Now, the comment was made, well, he's a dentist. He's probably making great money, right? With that said, anytime you own a business, it really is tough to make ends meet. It's much tougher when you have employees that you also have to cover. So it's interesting that a comment was made, dentists have high overhead. I would probably expect that. I think anyone that owns their own practice in the medical field probably has some ridiculous overhead, especially when it comes to having their insurance that they have to pay. But there's a disconnect in our market, right? There was no reason, let me put it this way, there's a disconnect to our markets right now. Let's face it, there is no reason that the markets should be moving higher. Now, you might come out with, well, you don't fight the Fed, and the Fed have thrown the kitchen sink to it. But again, remember, there is no predictive model available for the outcome of this pandemic. It's not a pandemic, is it? I think it is. There is no predictive model. In fact, in all honesty, you can't throw enough computer technology to work on a model that's going to predict how many people have the coronavirus. Pretty neat, though. We are still nowhere close to having a plateau. But yesterday, we only were at 18,198 on Sunday. I guess that's today. On Sunday, we were only at 20,000. We're at 25 before. So we are making some progress lower. but we're nowhere close to having a model to predict how many people have the coronavirus, how likely they are to be in contact with other people and spread it, to what degree social distancing or masks actually deter the spread of the virus. What's the range for cases from severe to very mild? Is there enough supply of obviously protective gear, hospital beds, ventilators? Is it adequate? How can we get more? We have obviously seen in some areas, the hospitals when they, I'm obviously using New York and Washington State, right? Where they got hit extremely hard and we're not prepared. We're not ready for it. When will the treatment be ready? To what extent will it speed the recovery? To what age group and what type of health people will be in? I mean, I could keep going on and on and on. There is no predictive model that's going to get us back to where we feel we need to be. There's just not. There's no predictive model that says, hey, we're going to make this or get out of it pretty easily. We don't have it. And there's not enough computer. Well, the variables are so great, there's no computer strength or power to run the simulations that give us anything realistic. As we said before, you know, anywhere from 0 to 12.4 billion people will die from it. Just to do a sound check, you guys are hearing me okay still? Sounds like ADP out in Brazil might be getting some feedback. Thank you, Maud. Thank you, Dave. Thank you, Lance. So there's no models that are predicting this, which means we're somewhat stuck, right? I stuck the Greeks in here because I find it kind of ridiculous. And I'm going to go ahead and I'm going to pick on really Under Armour. But your delta is made from the gamma, theta, vega, RHO, time to expiration, volatility, you know, stock price. There's a lot that's in here. But what's not really adding up or making sense, on a 16% up day on Under Armour, the put lost 41 cents. And at this time, with Under Armour, what was the price? The price was $9.77. There was no big volatility crush. I mean, plain and simple, the VIX was down 3%. So when you have a 0.81, really you should have been down about 14 cents. Down about 14 cents. Yet on this particular day, you were down 41.86 cents. Option prices are not being priced correctly. They're lagging. They're sometimes lagging by 2 or 3 days. I wanted to show one other. Hold on. All right, we have some May 10 puts, 97 cents, only made up 39. We have some other puts here, 97 cents, only made up 42. If we were to go and take a peek, 39 cents out of 97, maybe we have a 0.4 delta. If we click on these puts, we click on options, $10, Find the delta. What is the delta for the $10 strike May 20th puts? What is your delta at? There you go. 0.84, 0.85. For all intensive purposes, we should have been making up about 82 cents, 81 cents at the end. We made up 39 cents. If we go ahead and use the May 22nd, only made up 42 cents. So that was about a 0.41 delta, right? We go to take a peek at this one. The delta here says what? What is the delta on the May 22nd? So someone explain to me what's happening with option prices. What's happening today? What is going on here that we can't get our deltas on something as simple as the VIX, who is down 1.47% today? Why are these options having so much of a problem? Someone give me an idea. Someone tell me, why are these options not getting it? Why are these options not following anything close to their deltas right now? Well, volatility, but with all due respect, volatility's down. Some of those positions we had in there were bought and rolled a week and a half ago. Volatility doesn't answer that question. It's a great guess, but it doesn't answer it. I have in there, remember, theoretical data is used for the pricing of these options, which is sometimes just ridiculous. But someone give me an idea what's happening. Lance, the stock market hates you. That is a possibility, but Lance, I don't think I'm that big that it matters that much. Market makers being very active. It could be. In fact, I unfortunately had someone text me and say recently, are you ever going to work on some cost basis? I said I'd get to them. And out of frustration, I tried to joke it off and say, it doesn't matter. Yeah, I can, but I'm trying to figure out some other problems. I'm also getting more money in. All of a sudden, Hurley Investments became more relevant by being able to protect people and giving them something in down markets. But I kind of shot off a text that was maybe a little bit flippant, so I apologize for that. But I'm like, kind of doesn't matter. As long as we're adding shares that they're cheaper when things come back, the process is in place. It's somewhat ridiculous. And unfortunately, I was probably taking out a little frustration in the text saying, damn it, these things aren't making up a whole lot of sense right now. In fact, their pricing, if you were to ask me, their pricing model, Black-Scholes, right? There it is right there. Cost and price, current stock, strike price, free risk interest rate, time to maturity, normal distribution. There's no normal distribution. The alpha doesn't make sense. Doesn't work because pricing includes volume, open interest, and one variable messes up the whole model. In some way, shape, or form, volume and open interest is messing up the model. For Under Armour, we have 412 contracts. And they're in two different SKUs because we couldn't get them filled. No one was willing to be the short put on the other side of a long put. It took us 3 days at market pricing to get Under Armour long puts filled. The Under Armour here, May 22nd, 1050. The poor individual here, right? Poor individual here. Point in time, 7:30. So it cost over $1, right? Purchase price, 121. Do the math, 1050 to 977. It's what, 70 some odd cents of in the money intrinsic value. And you lose 42 cents on a 16-cent update. What I'm going to do is I'm going to take everything from my purchase price, my cost basis. It's going to be cheaper, but right now, with Under Armour right around $9. In fact, let's take a look at Under Armour, right? Under Armour right now, bad earnings, closed at 901, probably going to go down and touch that 750 range. Actually, probably 810. I know we have some lows at 750, but probably going to be 810, which means it's going to be down 19%. So we'll probably pick up somewhere in that 15% more shares of stock. For every 3,000 shares, you'll pick up Yeah, I'd say 150, but you'll probably pick up 200. I'll throw the cost of what it costs in there as well. Actually, excuse me. For every 3,000 shares, you'll pick up 450, so we'll probably add 400 in it. But it was a difficult earnings for Under Armour. One of the unique things, and I have a article about them down here. Under Armour, their sales declined by 23%. So when it comes down to it, they're still selling, even though they have a good online presence, they're still selling the majority of their stuff in stores. And I'd agree, I bought most of my Under Armour in Cabela's. Hunting, fishing, apparel, that's where I get my stuff. I get some exercise stuff for my wife at Academy down in Houston. But plain and simple, they're down 23%. Their online is not making up for the loss of people going to stores. Footwear dropped 28%. People aren't comfortable thinking that they're going to get the correct shoe size for my hiking boots. I want to put them on. I want to make sure that my feet and footwear are good. I want to go into a store to be able to do that. Accessories are only down 17%. They came in at negative 34 cents instead of a negative 18 cents. Their sales revenue is 930.2 million instead of being at 938.4. A comment was made, Kevin, who's going to buy clothes near normal times and for how long? In all honesty, for out here, the archery hunt starts now. For those people that need new hunting gear, which is one of their big times, it's now. And then the neat thing is, those of us that are rifle, for our rifle hunt for the deer, we're going to get it at the holidays for the Memorial Day holidays coming up. Great time to pick up new tents, new cots, all your crap that you beat to hell last year and just threw into your garage. You get to go out and rebuy it again. It just goes to show that there's still a need for retail space being out there. And right now, you have to understand some of your options are not going to be priced correctly, that they have a 2 to 3 day catch-up time in them. A lot's going to be happening on the day of options expiration for options that might be expiring for you. And we have monthly options expiration on this Friday. So look to see a lot of catch-up this next week on positions that on some I found, your long put option is worth less than the intrinsic value for the stock. How is that possible? How is there negative time value on an option? If your option's $4 in the money, it should be at least $4 of value. How are you getting $3.91 at times? It's something you scratch your head and you go, wait a second, this doesn't add up. With that said, I have our market recap in here. Gains are mostly broad-based. And with option pricing not exactly being where it needs to be, I'll be honest with you, we have some stock right now that we're letting run. Apple, there's no protection on Apple. We're letting it run. Disney, there's no protection on Disney. We're letting it run. Visa, there's no protection on Visa. We're letting it run. I'm sure I've got some others. JP Morgan, we took our protection off at 92 or 91, went down, touched 90, almost had to add it back on, but really I'm not looking to add protection on to JP Morgan again until 96 or 98. It'll be interesting to see where it heads. But very interesting to see where our markets are going. We're still bullish, a lot of room to the upside on the Dow. The first R1 level, resistance level, is at 25,828. The 200-day is at 26,425. The S&P is still technically bullish. 3,001 is the 200-day simple moving average. I will most likely be buying protection close to the 200-day simple moving average on the S&P 500. NASDAQ's going through the roof. 94.68. The R1 will probably be overbought at that period of time. And we'll see if we can't start to protect for a downward movement there. Where will the S&P end in May? Man, makes you wonder. I don't know. What an amazing month we had last month. Futures are down 0.5%. Come on. Catch up. Year-to-date change is down 10.19. I was looking for the monthly. So if we take a peek, May, I move that out of the way. May 3rd was the first day. Opened at 27.87, sitting at 28.32. Oh, I've got a hard time seeing us go higher than 2% in May. It just doesn't add up. Earnings, Under Armour today. We had Marriott, we had Cardinal Health, Duke Energy tomorrow, Wednesday, Jack in the Box, Thursday, Alibaba, Fossil. Interesting ones on both Carnival Cruise Line and Hertz. JD and VFC Corp on Friday. I do think the S&P earnings have slowed down. Treasury budget tomorrow will be a very interesting economic report. We probably will not have inflation. It seems like oil has been down. Maybe the rebound on oil will spike inflation, but we're not at a point where we're worried about inflation. That's definitely going to be something down the road. Friday, options expiration, the monthlies, and Friday we will have a series of economic reports that really you can't have a great capacity utilization. Retail's got to be horrific. Industrial production has to be horrible. Business inventories could be skyrocketing. Michigan sentiment, it can't be good. There's nothing that justifies any positivity coming out of any of these reports on Friday. Yet watch maybe our stock market have some kind of short covering. I don't know. I don't get it. We're going to be quick to the trigger to get protection back on. I just have some interesting reports here. We're in Ford. Take a look at Ford. A very interesting article on why the stock isn't dropping. U.S. to the risk of the second coronavirus wave and depression. An economist here, Mark Zandi, really gives some good information for you for what we could run into. How the coronavirus led to the highest ever spike in U.S. gun sales. Come on, American Outdoor Brands Corp. We might get a ridiculous jump on a depressed stock. Good one to be in here, possibly. I found about, again, another gun article on how they're sold. Mushin telling us that unemployment may have hit 25%. We just found that out, right? We just found that out, that if you just work your own numbers, we're at 25% already. We've got that one figured out. No brainer there. I found this one interesting. China under pressure to write off loans as countries struggle to repay debt during the coronavirus. For all those poor people that took China's Belt and Road Initiative, they're screwed. They're going to be giving up ownership of these companies. Awful. Very interesting article. Spend your time reading it. It pays to stay unemployed. That might be a good thing. It's a good thing if you're a socialist. For all the rest of us, it's killing us not to have workers wanting to come back to work. Take a peek at some of the charts here. Some really amazing numbers are in here. There's a part where it goes by the jobs right here. What jobs are better off just staying at home? And in all honesty, anything that runs into that 120% line, that is a really crappy line. Anything that runs into that 120% line, because it's tax-free, it's better off to stay at home. They make more money tax-free to stay at home. It's just a bugger. It's just a bugger. Let me keep going on. I know I had a couple questions come in. I'll get to those in just a second. Make sure you go through and read this report. A lot of information, a lot of charts. It's a great way to see it. Under Armour sales are my last one that I've already gone over. So we had a couple questions come in. Let me go to your questions. Average cost is determined by shares bought. How many times is D if you cannot buy more shares? Does not affect cost basis. People like myself need such data. Is this not useful? So again, it's useful doing it on a spread trade. When you're collar trading, if you want to know your break even, it's something you can sit and watch a stock get there. But more importantly, the process is how many shares do you pick up so it gets back to your purchase price. That's the collar trading process. The more shares you add, the more percent return you're going to be profitable as things get back up. Some you're going to break even. For example, on Boeing, our break even is in that 182 with our current long position. It could be as low as 162 or 164. It'll be interesting to see where Boeing gets to if they get the okay from the FAA to make their 737s again. If they can release them. That's going to be a big cash inflow on the receivables for Boeing. But the profit is made when it gets back up to that 300, 350, 380 mark. And the fact that we've tripled up shares, or doubled up shares, excuse me. So that's going to be the interesting part on the cost basis. But again, you can work through and pull all that stuff down and add and subtract. Finding cost basis is level 1 material, right? The short answer is for myself, I haven't had the time recently. And more importantly, I'm looking at portfolios and how to get them profitable, which, with all due respect, has nothing to do with cost basis. It's trying to understand where short-term trends are going to go to have a Visa that should get back up to 200. Disney, I was at least thinking 115 if you work valuation, but we might have to hurry up and get protection on Disney again. JP Morgan should be up to about 104. So it's where can I find the short-term trends to let some positions run and then get protection back on for a drop back down. Yes, Maud. By giving out in the state of Utah $460 and another $600 tax-free from the Fed, basically people out here are making $66,000 a year, not working between March and the end of August when the Fed's subsidy goes away. There's talk of extending that extra $600 for 12 to 18 months. I don't know why you think you're going to stimulate the economy by giving people that make $66,000 or less tax-free money. The state of Utah is also making the 6-month period, March, April, May, June, July, August. That 6-month time period is going to be a tax-free unemployment for the state of Utah. They will not collect taxes on unemployment checks issued during that time period. A comment made by Jeff Gulancher, I don't know how to say it. Why do we pay taxes when the Fed just prints everything that's needed? True. Man, our budget looks awful. So I mean, for me to sit here and tell you, I think I've got an understanding of where we're going to go in the near future. I don't. There's too many variables. The short answer is, where can I make quick little runs up and then start to get protection back on for the runs down? For the forecasters that are out there, more power to them. To be 100% honest with you, I wouldn't listen to anything that you hear on TV, that you hear in general. It really is garbage. Garbage in and garbage out is what I'm going to tell you. Find those short-term areas, those short-term runs like we had last week that we might not follow through with this week. Let a couple things run for a short period of time and get ready to get protection back on as soon as possible. It was really interesting last night, all the way till like 3 in the morning, we had futures up by 150 points on the Dow. I thought it was 12 to 16 on the S&P. But that last hour when people started to trade for today, boy, the futures was reversed really quickly. They reversed and things just, they didn't look good today. It was rather weird how the futures reversed. Oil, Brent's at $29.96, might be running up against the $30 resistance level. WTI, $24.38, might run against the $25 level. Gold has moved, still at $16.97, almost $1,700. People are worried about future inflation, yet silver sits at 1560, can't get above 17. Very interesting. Our pre-market right now, the Dow's down 114, the S&P is down 14, and the NASDAQ futures are down 23. As I look at some of the bigger positions, Apple's up 19 cents after hours. Boeing's down another 41 cents, sitting at 128.50. Bank of America's unchanged. Alibaba's up 55 cents. Chevron's up 52 cents. Disney down 10 cents, sitting at 107.67. If it breaks that 107.50 mark, we're probably looking to add some more protection there. Ford's down 2 cents. It should be closer to $4.80, most likely by the end of the week. It's at $5.10 right now. Freeport-McMoRan at $9, up 2 cents after hours. Facebook sitting at $2.13, down 18 cents after hours. Micron up 5 cents, sitting at $48.25. NVIDIA up 88 cents at $323.50, where we want more U.S. chips to be made here. Target's up to $120.40, up 22 cents after hours. Way to go, Target, for all of our leap long calls there. Visa's unchanged, but sits at $183.56. And ExxonMobil's up 18 cents, sitting at $45.92. You're going to have to be nimble. If you're looking to trade this market, you're going to have to be nimble. You need to let some things run together and gain some of these gains, right? So we have a couple specific positions that we're letting run in order to truly make a little short-term run like we had last week, get protection on for a down week. Any other questions I can answer for you guys? If there are not, I will see you again tomorrow evening. Don't forget, any new trades that we're looking to put on, we need to give ourselves time. We're going to be going out in time, planning on dollar cost averaging. To play a short-term trade, even if you do give yourself, 2, 3, 4, 5%, there's not enough downside protection to really protect you in some spread trades at this time. Guys, have a good evening. I appreciate you being here. I do hope this was helpful for you. Sorry, I kind of got sidetracked at the beginning there. I lost my way. But hopefully you enjoyed a couple good videos. I look forward to seeing you tomorrow night, 6 p.m. Mountain Standard Time. Have a good evening.